Hello traders, hello YouTube, hello Elliott wave lovers, and welcome to episode 31st of Bitcoin and Ethereum Elliott wave analysis, where every couple of weeks we take a look at these two assets, try to make sense of what's going on, where we are in the cycles, what kind of corrections, impulses we have, and just try to make sense of this overall market through the Elliott wave methodology. So, we're going to jump straight onto it, guys. You can find me on Telegram at Elliott Wave Cafe. You can find me on Twitter at Elliott Cafe as well. And any questions, any requests, anything that you want to share with me, I'm available at those channels. Pretty easy to find, and I'll be happy to entertain any discussions you have. I've actually made another video last night about different things that Elliott wave traders struggle with in terms of Elliott wave. It was about an hour recording. Go ahead and check that out. I'm going to put a link here as well, but it was just an interesting subject and different questions that I tried to do my best to provide answers to. So check that out, because I think you'll find a lot of your questions as well in there. So let's jump over and see kind of what's been happening to Bitcoin since last time I've done a video. And listen, we've done this impulse, and this is finished. It clearly completed at about 64,800. And since then, we started this, a little bit of a deeper correction. We've dropped, almost 30,000. We've gone all the way to 29,320. And the question is, what kind of a pullback this is? Is this a second wave? What's going on here? How can we make sense of this decline and see if there is still, enough reason to believe that this market will continue to push to the upside based on kind of what we see on the chart? Well, what I see overall, I see this kind of large setback in this, massive second wave that took almost a couple of years. And then since then, we've done a pretty nice breakout, and we've done a pretty clean, strong, impulsive move. Now, impulsive moves are, moves in the direction of the primary trend, which is higher. And that means that anything that happens against this move, it's a corrective pattern. So we're looking for this correction, and we're looking for, any evidence we can to see if this correction is complete. So what you see here is I've labeled a second wave pullback. And if I'm considering this as being a wave one, and I'll jump over, to a different count, just show you, a little bit of an alternate there. If I'm considering this a wave one, then this correction here must be a wave two. And I'm looking for evidence to see if this wave two is complete or not. So this dropped all the way to 2930. And since then, we've done a pretty nice impulsive move up again. So based on the fact that, I'm moving impulsively from these lows, I could say that this correction is done. And I'm gonna go with that idea for now until something else comes in and shows me that actually that's not the case. For right now, I think that's a fairly strong assumption to have, that after you've had a pretty deep correction in here, and you've followed that correction by an impulsive move higher, it's fair to assume that this could be the beginning of this larger third wave advance. So I'm gonna go by that premise. If this doesn't work out, and the market, starts to act in a different manner, a different way, I'm still fine in considering that this move could still be a second wave, as it's going to be corrective against this larger trend. It's just going to take a little bit more time to unfold. So there's no really way of telling, what's going to work out. But the assumption is that this move out of here, it's impulsive. We're getting a little bit of a corrective move against this trend, and the likelihood of it continuing higher, it's pretty high. So we'll remain kind of cautious. We'll watch how it develops, and we'll continue to look for those further evidences. Here is the other count, where this, instead of being a large, let's say, second wave cycle, that means we're working towards completion of this larger wave 5. And I'm counting this as a wave one from these lows, right? This is a fourth wave. You go into one, you have a nice clean ABC here in the second. It's a very, very deep decline. You finished an impulsive move here in this larger third, and now you're kind of starting to move sideways in a more of a corrective manner, and in what it looks to be more of a contracting type price action. And what's contracting? Usually it's triangles, right? So you've done, let's say, a complex move here in this wave A. You're starting to kind of build up a case for this wave B that could be done, although being impulsive, I got my questions. It could be that this wave B here, it's still in progress. So that means that we're going to get a B wave pullback and then another, move higher in C off B, and then you're going to get again a drop in C, a D, and an E. You can see back here I've kind of put down some time fibs, and I use time fibs in a way that kind of guides me to kind of compare this couple of moves, these moves in wave 4 with whatever happened in the wave 2nd. And you can see in here that I have 100%. And this kind of takes us, I think, back to, almost to November, December of this year in terms of completion of this larger triangle, or maybe even, into January to February of next year, if this moves continue to kind of be choppy, overlapping, and kind of contracting and moving sideways. So that would mean that the next likely move, it's still going to be to the upside. It's just going to take a little bit longer for this to move sort of sideways. So I'm completely prepared for this as well. I have, a couple of fourth wave fibs in here, which is, a 23% and a 38%, which are, sort of, standard pullbacks for a fourth wave. In terms of a triangle, you're usually looking for a 23%. When you get more of a standard fourth wave pullback, you're looking for about 38%. Anything below 50, it starts to be problematic. And I've discussed this in last night's video as well. So these are the two scenarios that I'm watching. I would say that my preferred scenario is that this is a second wave pullback. And then the other scenario is that this is going to be a fourth wave triangle. They're both very viable. The fact that I am getting an impulsive reaction out of this kind of sends me thinking that it's possible that this correction is complete. But, still early, remains to be seen what's going to happen. And I'm going to continue to look for that evidence. The next thing that I wanted to show you is just briefly touching on the moving averages. And what you have here is you have a weekly chart. And, the 50 weekly, it's an important kind of indicator of the overall trend of the market. And you can see that it offers pretty good direction. It offers, good support every time it kind of pulls back towards it. And, we've tested this one time. We're coming to retest it again. And it's very important for this market that this 50 moving average continues to hold for the continuation higher. If we're starting to see that we're moving below it and close below it and we're starting to get weaker, then, that evidence of, of a continuation higher, it's going to start to lose ground, and we're going to have to look either sideways or more towards that deeper correction in that second wave. The 200 week, it's still fairly far away. It's at about 15,600. So, I don't have, a big issue with that. It continues to climb. So this market continues to trend higher, but it lost a little bit of that momentum because of this correction. And shorter term, you can continue to watch this 21-day if you're doing any intraday moves. And right now we kind of close below it. So we're kind of fighting with the, with the trendless market for right now in Bitcoin. But I'll continue to watch this as further evidence of where the price might go. The other thing I wanted to spend a little bit of time on is on the candlestick chart, and you can pull any chart you want, from bars to line chart to whatever. But I wanted to draw attention to you, kind of how the market moves in these cycles and how these corrections in price, not just in Bitcoin, but in any other market, continue to be, they are usually very, very similar, right? In time, magnitude, size. So you can look at all these indicators and just kind of, draw some conclusion, will help you, give you more evidence in kind of what's going on. So what I've done here is basically I've connected some of the highs with some of the lows from these corrections. And, if you do this exercise yourself, you'll see there is a very precise angle of descent in terms of this correction. So for example, this one from 2014 to 2015 with the one from 2000 to 2019, they're very equal, in terms of their slope, in terms of their size. This one here was a little bit smaller, but still in terms of its slope, it was almost parallel with the correction that we've had before. And it's a similar story that's kind of happening right now. So what this basically tells you is that, when you look at corrective moves, you have to put time into perspective, time and size. And, kind of measuring previous cycles, it's important because this kind of tells you, hey, don't expect this correction, if it's going to be something larger, to finish, anywhere sooner than, let's say, if I'm comparing, let's say, this correction with this one, maybe by the end of the year. If the market continues to pull lower and it's going to match this one, let's say if it's a deeper pullback in here, it might take, all the way to the middle of next year, right? So just kind of watch the slopes. If the market kind of falls apart, at least gives you an additional tool to look at and, kind of guides you into not being necessarily impatient and like, no, it's got to be done. It's got to be done. Well, if you look at previous moves, which tend to kind of mimic, even the previous ones, you have a pretty good idea of how this will kind of unfold overall, right? So just kind of drawing your attention to this. Now, in terms of candles, we've had a pretty nice couple of months. They were pretty strong, and the month of September was looking good there for a while, and we're kind of starting to fall apart here and just pull back a little bit. And it's important kind of how we close for a continuation. We still have another 5-6 days into this month, and I'm not sure how much more power we'll get through this month, but there is a likelihood that this market will close on a bearish month, and that could be problematic for the month of October, although I'll show you here in a second in terms of seasonality. The month of October, November, December, they're pretty good months overall for cryptos. But the fact that we're losing a little bit of ground here, gives me a little bit of a reason to start to be concerned about kind of what could come on the next month. So I'm kind of keeping an eye on the price action regarding candlesticks and kind of what that's telling me up there. Now let's jump over and take a look at some of the shorter time frames as well. And this is that impulsive move that I've kind of showed you from these lows, right? It's pretty, pretty directional, right? Without a lot of overlapping waves. And I think you can count it impulsive. If it is impulsive, right, that means that this move back in here, it's a corrective pattern. It kind of happens against the trend. And for right now, we've gotten a pretty good equality between this wave C and this wave A. It's almost like 100%. You're pulling back into, the 61% retracement, fib retracement of this impulse. So you're starting to get pretty good evidence that this is the type of corrective move that you would want to see, almost like a textbook pullback. Now, I'll continue to look for evidence that this is done, and I've talked in detail about this last night as well into the other video. As the market wants to kind of turn from here, I'm going to look to see if it actually breaks above that level. Then I'm going to look to see if it breaks above this 48,000. I'll start to get a little bit more confident that that's the, that this correction, it's completed and it's going to start to kind of push to the upside back in here. But for right now, we did pull back. We have a little bit of a, of a retracement in here, and we'll see if this will be sustained. If we're starting to move lower and we're starting to kind of break below this 38,300, I think it is, the 618 level, and we're starting to attack this, 35 level, 78.6, things are going to start to look fairly dangerous for Bitcoin, and we're gonna move into the risk of it, pushing below these levels. Now, as you know from the Elliott wave rules, this wave too can come as low as this low back in here, and as long as it doesn't break below it, it could still be a second wave pullback. The problem is that the deeper you go, the less chances you have that this is actually going to work out. All right, the market it's gonna have enough strength to kind of test those levels, and the chances of it breaking are going to increase. And what that does, it sends me to the next count, which is this kind of blue alternate, where we're looking at that deeper second wave correction as it's going to start to unfold the moment those levels get threatened. So we're counting this, let's say, in this wave A, which is, you could look at this as being an impulsive move in a 1, 2, 3, 4, and 5 for wave A. And since this move is impulsive, I will count it as a wave A of this larger B. So you would go up in A, down in B, and then up in C to complete a B wave, and only then you're going to sell off. I have a hard time thinking that this is going to be a B wave on its own, right? Just because of the impulsive nature of this move out of here, right? This is kind of what keeps me thinking that I don't think that's the right interpretation. I'm placing it there as an alternate in case everything kind of falls apart, but I don't think that's the case, right? So, I'm looking at this as an A, possibly a B wave, and then maybe another push up in the C, which, if you remember what I've talked about in the first couple of slides, could be B wave of that larger triangle, right? So you could have, count this kind of corrective and then go A, B, C, D, and E, and then you kind of push to the upside. So I know there's a lot of, a lot of scenarios in here I'm trying to present to you without, getting you too confused about what I'm thinking, with kind of what's my preferred interpretation. So I'm kind of showing you this, to kind of keep it on the back burner, but just so you know, in terms of my preference, I'm going to look for this being a 1 and this being a 2, and then continue to look for further evidence that this is the case. Otherwise, we're going to have to revert, to those alternates. The other thing that is, definitely interesting, it is when you look at Elliott wave and when you look at Bitcoin and the S&P 500, is their kind of tight correlation overall in terms of the price movement. And you can see the correlation right now, it's as high as almost 80, and this kind of continues to manifest every time you're getting a little bit of a sell-off in Bitcoin. You can notice that the stock market sells off. There was a little bit of a divergence here as Bitcoin was testing those 29, 30 levels on those Chinese miners kind of being blocked from their activities, and the stock market didn't really have anything to do with that and kind of continued to push to the upside. As soon as we kind of clean all that over leverage and issues with the price, we started to kind of catch back with the S&P 500, and since then we're almost on a step-by-step move with it. So I'll continue to kind of watch this because if we're continuing to move higher in risk and higher in these riskier assets, I think Bitcoin is going to follow. It's been pretty clearly demonstrated over the past few years that Bitcoin, it's a risk-on asset, and people will buy cryptos and Bitcoin and Ethereum and all the others when they feel good about the economy, when they feel good about the prospects of these things continuing to grow, and they will allocate money towards it. Right. At the same time, they allocate money towards stocks and real estate and whatever else it's out there that can generate returns. So from that point of view, I think Bitcoin has proven that that it's quite correlated with these other assets. So I'll continue to watch this. If the market starts to fall apart, for example, we're taking a look at the S&P 500 every day into the pro room, and we're looking at this rally of these lows, and there could be a chance that we're going to make new all-time highs. But if things start to fall apart into the S&P, into the equities, and this is just a sort of a bear market rally, then I don't expect Bitcoin to move to new all-time highs, and we're going to have to be very, very careful about how we count and how we analyze, moving forward, let's say here into the fall, as we move into the winter as well. So, but for right now, the signals from the Federal Reserve, and I don't want it to kind of step into this kind of whole fundamental discussion, but even though they're going to start kind of tapering their bond purchases, they're still not looking to raise rates, and they still remain fairly easy on their policies, which should continue to support the prices moving forward. So that's kind of what I see. You can see a return to the energy. You can see, a return to the reflation trade. We're kind of putting behind us the virus, and things could start to go back towards improving in the labor market, and so the overall economy could benefit here. All right. The other thing I wanted to show you, just kind of in the same idea, is this copper and Bitcoin correlation chart as well, and you can see that they're very highly correlated, and this means because copper is a risk-on asset. Bitcoin, it's this kind of proves my thesis that this is, and it's not just mine, but it kind of shows you that they almost move lockstep with each other. And for right now, copper doesn't really know what it's doing. It's kind of moving sideways. It's kind of consolidating. But this whole move, from these highs to these lows in this red line, it's still choppy, overlapping. You can notice, pretty interesting kind of complex correction in here. You can go in an A, B, C for a W. You can have an X. You can have another A, B, C. This could be a wave 1 of the lows with a wave 2, and then a push higher. So that kind of talks the same language as Bitcoin does, and if the economy improves, if we're reopening, if everybody kind of forgets about the Delta variant, and everything kind of starts to go back to normal, and there is a lot of, let's say, demand for copper and industrial metals and oils and things of that nature, copper should break out. And if the correlation holds tight, which I think it will, that means that Bitcoin will kind of follow through. So we might be still in a period of a little bit of a sideways move, maybe a little bit down, consolidate a little bit more, work through some of this issues that we have, and then, eventually we'll get a green light and the new kind of uptrend will start to unfold on there. And then here is a seasonality chart where we're looking, when we were a little bit afraid of the month of September, which continues to prove that it's a pretty weak month overall. I mean, I just showed you that kind of bearish monthly candle on there. And, we're kind of finishing this month off and we're going to start to push into October. And these months are pretty powerful. So you can see here, in about 71%, both October and November overall, the month kind of closed higher than the previous ones. So this is I think an important indicator. Usually you're getting about an 18%, in the month of October, about 11% in the month of November, kind of medium returns on there. So something to definitely watch. And then going into September, a little bit of weakness, but still these 3 months are pretty good. You can see the month of September and month of March are the ones that are kind of the weakest of the year. And, here you can see January as well, that it doesn't look that good. So this is kind of in terms of seasonality. So things are exciting. Let's see if we're finishing off this correction and start to kind of push to the upside. Guys, you know the spiel. Just subscribe and like and share this video so a lot of people can see it. I thank you for being here. And again, don't forget to subscribe and to like. So all right, let's jump over to Ethereum and take a look at this. And this one, it kind of follows the same path. It's been, slightly weaker here, with this, a little bit of a pullback. But I think overall the trend, it's kind of clean and clearly to the upside. This was a major correction in this wave too. And this was another impulse that kind of terminated, back at 4,000 or 4,600, whatever the high was. And, we pulled back here and we created this, interesting, head and shoulder formation that never really broke to the downside. And instead, we've actually started to do a rally, and that's an impulsive rally higher. And it's followed by a very kind of corrective move following this impulse. So again, this kind of keeps me thinking that, this wave two, it's completed into these lows, and we're looking for another 1-2 in here, and then a break, much higher break to the upside. I know this count is extremely bullish. Again, I'm going to show you another one here that shows you that this could be actually a fourth wave triangle, kind of sideways, followed by a move higher. But I too like how this looks, and it kind of lines up with the rest of the kind of fundamental views, with the growth of the network. Possibly with some ETFs coming down the road, we could be, moving explosively to the upside here into the next cycle. And that's why I'm favoring counting this as a second wave rather than necessarily a fourth. So let's take a look at this other one, which counts it like this, where you go in a 1-2, 3, and then a possible move sideways in this fourth wave. You've kind of tagged this third wave exactly at 261% multiple of this wave one. So it's totally cool. And then, moving sideways, that means that in terms of, its distance, it will take until, maybe January next year for this Ethereum, to continue to kind of converge. And eventually we'll finish off and then provide the next explosion higher, which, moves out of a fourth wave are kind of final moves into a fifth, possibly of this larger third wave. So that's kind of what I see on Ethereum, and kind of going, I'll come back to this, but I wanted to show you, well, actually, let's just kind of keep going with this. I wanted to show you the candlesticks because I'm not really happy with this rejection out of these levels, right? It looks like a pretty nasty bearish engulfing out of there, right? Because you've tried to break to the upside and you failed, and then now the market breaks below into the other direction. And this is, not a super good, not a super good sentiment signal. But as long as we stay obviously above these levels, I think that, and this sort of looks corrective. I think that even if you dip a little bit lower, this could still be a corrective pattern, and you can push next to the upside. So maybe, they kind of failed into this first try. People got really excited that, Ethereum will break higher. Said, no, let's wait a little bit longer. Let's kind of clean up the boat, pull back, and then and then move higher. So this is kind of what I wanted to show you, this kind of weekly bearish structure that kind of happened in Ethereum. So the other one is the moving averages, which is obviously we're coming into a three-wave decline into the 200-day moving average following an impulse, right? And it could be, a lot of reasons why you would buy Ethereum up into these levels, right? Because you have a correction, you have the 200-day supporting the price, and obviously you would look for this to push to the upside. Now the question is, what do you do if it doesn't work out? Well, you would have to kind of give up that thought and say, well, we're breaking below the 200. This move, instead of a three-wave decline, now becomes a five-wave decline, and I think Ethereum will look messy for a while, and that's kind of where I'm going to go with. If Ethereum breaks below, closes below, and starts to look that it's kind of threatening back towards 2200, maybe 1800, right? If it doesn't pan out as a triangle, then likely, again, just like in Bitcoin, this was a fake B wave rally, and then or an X wave for that matter, right? And this could become a complex W, this could become an X, and then you're still going to move lower, and that larger second wave, instead of being here, it's probably going to end up being down in here, and you create more of a proportionate decline, and then you're going to look for, for your kind of channeling techniques, something like that, and then you can look to buy Ethereum as it's kind of pushing back, let's say towards 1500, maybe even 1000, if this kind of starts to fall apart. So that's my thinking on Ethereum. And then let me show you the shorter time frames. So this is kind of that second wave that I'm watching in this kind of WABC in here, triangle in X, another ABC for this wave Y, second wave completion, nice impulse move out of here, 1, 2, triangle in 4, up in 5 for this wave 1, ABC into the 50%, 1, 2, and then let's go higher. If we continue to kind of push lower, I'm going to be watching this kind of 78.6, because I think, that's an important trigger indicator, to the strength or to the weakness of the market, because the moment we kind of break below those levels, things can start to look, pretty dangerous for Ethereum. So guys, I think that, we've come towards the end of this presentation, and, again, I want to really appreciate you and thank you for being here, continuing to kind of stick with this channel, you can find me, on Elliott Wave Cafe. This is the bot that kind of takes you over to, to our pro room. If you want to give us a try, there's no more free trial, so these have been canceled. I've just kind of decided to remove that over there, because, we've had a lot of people kind of coming in and out, and it was, just kind of getting super messy. So if you're really interested and curious about, learning, you just kind of have to come in and give us a try up there, even for a month. And then this is kind of some of the stuff that, we do in there every single day. This is kind of our menu at the Elliott Wave Cafe. So there's a lot of information. And also, there's a course there, for you to study if you subscribe as well. So again, thank you guys for watching, and don't forget to subscribe and give me some thumbs up, and I'll see you on the next one. And again, don't forget to watch that video I've recorded last night, because I think it's got a lot of good information and a lot of answers to some of those traders' questions. Again, thanks for watching, and I'll see you guys later. Bye-bye.